Hey, what's going on, guys? My name is Alex, and I am a real estate investor. I want to make these videos to share with you the challenges I'm having, the things I'm learning, and the obstacles I'm overcoming. And today, got a super good treat. Get to interview Nathan Maxwell. So Nathan's a real estate entrepreneur, capital raiser, AI enthusiast. A very impressive guy and someone who I feel we share a lot of values. So I'm super excited to have this conversation here. So how's it
Me
going,
too.
Nathan?
Hey, Alex, thank you. I appreciate the opportunity. It's cool to meet with you and looking forward to having a dialogue about investing and, learn a little bit about each other and some of the challenges too. Definitely, there's a lot to learn. And uh, I just love connecting with people because this is kind of the way we can all grow together.
Heck yeah. Heck yeah. Well, we'll just start off with kind of getting people some context. Where are you based out of and how'd you get started in real estate?
Yeah, thank you. So I'm based out of Colorado. I'm not originally from here. I grew up in the Northwest. But I've been in Colorado for a decade or more, and it's really nice here. I love it. So that beach is not actually where I'm at. It would be nice. Um, but so I'm based here. I've been investing since 2011, and I kind of caught actually that's kind of a flexible date. So first started investing in real estate as an accidental landlord, and this was actually my wife's at the time we were not married. It was her property where she was in school in residency. So so this was a property where it was like a primary residence we lived in. When we moved from St. Louis, we kept it and rented it. So it wasn't like a planned thing. But but even like as a kid, I'd known about investing in real estate. I've had my longtime friend and mentor had properties herself and properties in her family and whatnot. So just from just from being like as a kid, I was learning about that kind of thing, putting money away into a IRA and investing in
Hmm.
real estate, things like that.
Yeah, definitely
So
good, just financial sense built into it too. So that's cool. How did
yeah,
you,
it was great.
yeah, how did you make the jump from accidental landlord to where you're at now? Like what did the next couple steps look like too?
Yeah, so we moved out here to Colorado, and then our first home was I used the VA loan because I'm a Marine Corps veteran. Was in from '02 to '06. Um, so the VA home loan is a really nice benefit for people, and it's something too. I think it'd be great to talk about later a little bit. But we used that entry point and just bought a primary, and then actually kind of regret. Looking back, I would have held it, and but we rolled out of it. It was in a really nice submarket in Denver, um, in kind of the north part of Denver. It's just a really happening place. So we bought the place for like 300, 320, something like that. It's worth up 900,000. And it's been like a decade. So granted, it's been some time. So we bought the place. And then we had a little one. We had another one on the way, and we decided like, hey, we need this was a condo, so it was stacked. Each room was basically on top of it of the next, with like five floors and counting the basement, and like six with the rooftop. Really cool spot. So we sold the place. But then we bought a condo at the same time. So that's kind of when I think our first investment, let's say, was in like 2014, and it was a new build condo south of here. And we got into it for 230 or something like that. So we had, we'd save some money, put like 50K into it and got into a new build. So that was our first long-term rental investment. And then from there, over the next couple of years, we started adding a couple of other rentals. So we had a short-term rental, and then another one. Now we have three short-term rentals, and we have some long-term rentals too, a handful of long-term rentals. Um, so yeah, it just kind of took off. But I think that VA home loan is kind of a version of house hacking,
Hmm.
and that's just where you get into a place, and let's say you're young and single. It can work better for depending on where people are in their journey. But like you're young, you're single, and you get into a place and then you rent out, you know, all the bedrooms and you stay in the living room and just like rough it and make a little bit of cash flow and then, you know, rinse and repeat, do it again.
Ah, awesome. So basically, just using the tools you had at your disposal and just getting in the game. And once you start getting real estate, then you start building the skills. You start learning the how to make money and stuff, and that just compounds. Basically, it sounds like.
Yeah, it just and I think you can like one of the themes too that we talked about, I think we'll talk about later, is just kind of just jumping in. A lot of times I think people will hold back because they don't know everything or they don't know what they don't know, so they won't get started.
Mm-hmm.
So
Totally,
yeah.
totally, awesome. You know, typically, and maybe this is true for you, maybe it's not. There's like 1 to 3 people that maybe had a significant influence on your path, or maybe they changed your life direction, or they really helped you out. Do you have anything like that you'd want to share?
Yeah, definitely. I've got a couple people, and one is a late friend of mine, but she was really like maverick, really go getter. And I remember as a kid, I was kind of like having a little trouble in high school. What she did for me was she gave me a job, but um, it was an opportunity to learn how to work, and she was someone who I respected a lot. So the cool thing about that was just seeing her. She was also the person I mentioned who was a real estate investor, but seeing her just get things done. She used to do her own roofing and like build her own, like do her own remodel stuff, and just had a lot of skills. Um, so I had a lot of respect for her. So I wanted to like show up. So if it was, hey, we're gonna do some work tomorrow, or we're gonna do some work, on Thursday. Can you come over at 8 a.m. or can you? And like whereas before I was, you know, didn't have a habit of showing up on time and things like that. For her, I was like, yeah, I'm there, right? I'd show up. So she taught me it was just because she set that a good example and she was someone who I had respect for. I was like, all right. And I think I learned from that just to this day that just kind of like fundamental things,
Mm-hmm.
right? From her. So yeah, she had a big influence on me.
Heck yeah, heck yeah. Like in terms of, sounds like just discipline, work up, like setting the standard, kind of. Is that what you'd say?
Yeah, yeah, just kind of setting the standard. I did some other work. Like as a kid, I never really had a traditional job. Like some kids would work out of at the grocery store or something, or the hardware,
Mm-hmm.
store or something. And I would work. Actually, I realized just several months ago that I was a farmhand, and I never thought of myself as like a farmhand. But I would go over there, and we would do fencing. Um, we would dig trenches, ditches for like water irrigation stuff,
Mm-hmm.
roofing, whatever needed to be done, I would take care of it. So yeah, just learning kind of learning resourcefulness, and then just being around. I think a lot of kids could really benefit from that too. Just being around someone that has a trade or a skill where you can just bird dog an apprentice with what they're doing. And it's similar fashion in real estate investing, right? Like there's a lot of people who have a ton of knowledge in real estate investing or different points on their journey. And most of the people are willing and happy to share with others because that's how they learn too. It's like a lot of determination, but just being persistent and then asking people, and people will tell you, you know, what
Mm-hmm.
to do, what not to do. It's just having a mentor and a good influence for me, and that's what I want to do too for other people is to be a good mentor um, for them.
Okay. Awesome. Awesome. Is there anything that in your mind sticks out about like how you would go about or how you did get a mentor, or maybe things you would do to attract a mentor or anything like that?
I think I think for one, I don't know if this is kind of like indirect. There's a book I read recently. I may have mentioned to you before. It's Who Not How,
Mm-hmm.
and what I liked about Dan Sullivan and who is he's the author, but not the writer, if you will. I guess the true author is another guy. Um, but what Dan did during his childhood was he would ask adults about their life and, you know, what what is, how's your life? How are things going? What's hard for you? Like, what are their pain points? And it's really true. I've experienced it too. Um, Anytime you're curious and you have genuine curiosity, and you ask other people about themselves or about something they're interested in, they love
Mm.
it. They'll share all kinds of things with you. So just anecdotally, I had an interview with a friend of mine, a college friend of mine. He's from Madrid, and he was traveling to uh, Taiwan to do this like tech travel visit because that's what he likes to do. He was asking all these government officials, business leaders about the semiconductor industry and about like government policy and all this stuff. And you're just getting this wealth of information. So I think it would just be like ask questions,
Mm.
and show a genuine interest in other people, not because you want something, but just because you're interested in learning about their story, and you'll learn a ton.
Mm. Yeah, I think that's super powerful advice too. I've heard the saying, if you want to be interesting, be interested. Like also the book by goodness, I'm blanking now. Um, How to Win Friends and Influence People. I
Oh
believe
yeah,
that's
yeah,
one of the tenets in that book is basically be interested in other people. So, heck yeah, man, that's awesome.
absolutely.
Um, Fast forwarding to today, what does your current real estate business look like?
So we currently have two parts of the business. One is on the smaller side where we're operating short-term rentals. Um, we've kind of started handing off some of the operational pieces to property managers so that we're not the name in the face as the owner, dealing with tenants and dealing with trash. Uh, what is it? Termites, trash, and tenants and
Toilets, yeah.
toilets. Yeah, right. Yeah, so and I don't mind doing that. It's funny. One of the jobs I had as a kid too was like a apprentice for plumbing, right? So I was like a gopher. So I have no problem, getting rolling on my sleeves and all of that stuff. But it kind of comes down to where's your time best spent.
Hmm.
And for me right now, the the property we operate and self-manage, um, even that one, we have systems and processes set up, so it's not a heavy lift. But occasionally there's something that happens where I've got to go over like we had a guest check in and there was a there the cleaning had happened and there was a glass coffee table that just shattered. And it was what do you call that? Forgot the name of the glass, but it was like these little squares like all
Hmm.
over the floor. Um, and so yeah, had to head over, take care of it, but they were happy. Um, so anyways, going back to we have like the owner operated side of our own portfolio, but then the other side, which is kind of more fun, dynamic, and interesting, which is the syndicating side, and that's basically where a group of investors come together to buy a property that's outside of their reach if they were to just use their own capital and go get a loan and buy something. Um, so those are properties where they're like large multifamily properties, typically over 100 units, and there's so yeah, that's kind of what we're doing. So we're working with partners. We're working to generate deal flow for our own deals. Um, through our network of brokers, other sponsors, and people we know. Um, and so basically, those syndications, what they look like are typically there's a range, but typically the entry point for investors is like 50,000, and they're often a depending on how the group is set up that's running it. Um, they're set up as for accredited investors. There's kind of like three categories. There are investments out there for folks that don't meet the accreditation standard, and they're regulation CF for crowdfunding. Then there's a regulation D 506B, and they have 35 seats, I think, for non-accredited investors. And there's a 506C, and that one is for only folks who make 200K individually for the last 2 years, or 300K joint filer for the last 2 years. Um, and they expect to make the same in the year ahead. So those are pretty cool deals because they're they give people access to buy into an investment where they can get some great returns, but they're buying into it passively. So they don't have to run over there when something breaks and fix it. They don't have an active role. Um, but they still get the returns, they still get access to the tax benefits. Um, and so they're pretty great if you have a solid sponsor who has a good track record and who you trust
Hmm.
with the investment.
Yeah, totally. That's kind of like the key, right? Is finding an operator who's trustworthy and competent and experienced and stuff like that. Do you have any like tips, or if someone was looking for an operator or something? Like how do they know? Like how do they know that their money is safe with this person and they're gonna get the returns and stuff like that?
Yeah, I think one important piece of that is just look into the operator. What's their reputation? Um, what's their track record? Like how long have they been doing it? And some, there's going to be like it's totally okay if people are newer in the syndication space, um, but they may be working with a sponsor or a partner who has been, you know, running their business model for a decade or something, or a good 5 years. And so I think the first thing I'd say is just like practically just take your time, and it's okay to have a healthy dose of skepticism. It's okay to ask questions and expect reasonable answers. So from what I've experienced, if someone is new to like a passive investment, but they're interested in learning more, the first thing they should do is join a webinar. And um, the the person presenting the deal, whether they're raising capital for it or if they're the operator and the sponsor that and the capital raiser, if they're doing both, um, they they should be open and transparent and willing to like partner with you and answer those questions. And it's a process. So you're going to want to go to the webinar. You're going to want to look at their underwriting. What are their assumptions for the property, and you know what are their pro forma rents? Like what are they looking at renting the units for, and what's that base like? How does that compare to the market?
Mm-hmm.
Um, and just the other thing too is like eh, I think a lot of people are, if they're not familiar with something, they're kind of afraid of getting in the arena, right? And just being in the arena itself, um, and take the webinar call as an example. Oftentimes, and it depends how it's set up, but oftentimes we do like Zoom webinars, and you get to see the other people's questions that come up, and you'll get to hear that dialogue. And
Mm-hmm.
so even if you don't ask any questions, I mean, it's better if you do. But even if you join a call, you don't ask any questions, you'll hear 15 questions that are solid. And they're probably ones you're thinking of, but maybe you're afraid to ask if you're me, right? I've gone through that before where I'm like, oh, no, I don't want to sound stupid or something. I didn't ask. And then I learned, oh, yeah, you know what? It's not stupid. Someone else probably thinks the same thing and wants to know too. So now I'll ask a stupid question, right? Just because I know it's educational for a broader group.
Totally.
But yeah, like take your time, just get in there and you're going to learn. And then you can decide like, hey, this one is a good fit, or this one is interesting, but it's not the right time. So let me check out the next one when it comes along, and then build your knowledge over time.
Sure. Okay, awesome. So basically, like you were saying, you take your time looking at the operator and their background and their experience, and then they're going to show you their underwriting, and you can kind of like look and just do a check and be like, hey, those are actually market rents. You can kind of do that. And then also get in that webinar, spend some time with them, hear other people's questions and ask your own questions, kind of just build up your the amount of time you're in that arena, like you're saying. Awesome.
Yeah, just build up sort of like you want to get comfortable. So you want to build a relationship with the people. You want to understand and decide whether or not you can trust them. Um, and and so you really need to meet them. It's great. It's better if you can meet them in person, but if you meet them on a webinar, that's great. And then as you start to go through the underwriting for the deal, for example, if you're not familiar with the market they're in, for example, you may not know what's the cap rate in that market. Like, but you'll it's okay that you don't know that because you'll kind of discover and learn as you go along.
Mm-hmm. Exactly.
So yeah, it's really like passive investments are relationship based. They're exclusive relatively compared with like going and buying a share of a real estate investment trust.
Gotcha.
You know, you can just search the internet for that. But if you oftentimes you won't know about a deal like a passive deal unless you're on a mailing list or someone introduces you to it. So so it's an opportunity in itself for people who are interested in diversifying their investment portfolio and adding some real estate or adding passive real estate in.
Awesome. And is that who mostly where you're at, where your real estate business serves? Is it the passive investor looking for that deal? Is it the operator looking for deal flow? Like who is ideally are you able to help the most?
You know, it kind of depends. So like the first thing I want to do is just get to know people, understand who they are, what their interests are, um, and then go from there. They may not be interested in investing at all or interested in investing right now at all. So the first thing I want to do is just, you know, meet people, understand what their pain points are and their interests are. If they're an operator, and they already raised capital, et cetera, they may need an outside group to help them raise capital, and they
Mm-hmm.
may have really great deals. And those can be interesting because if it's a great deal or an interesting strategy, um, there are a lot of people out there that are looking for passive deals to invest in, and so we can help with that. And we can bring capital, and for investors, we can kind of connect them with solid deals as well. So it it kind of depends on what people are looking for, and in some cases, they're folks will have a portfolio of like a stock portfolio, stocks and bonds, and they don't have real estate, or they do, but it's single family homes.
Mm-hmm.
Um, and they're just looking to gain some exposure and learn about passive investing. And that's great too, because it truly is an education when you get in there and start learning about all these, you know, all the nuances that are involved.
Totally, totally. Can you touch on briefly maybe some of the syndications or some of the deals that you've done? Just I know you're telling me about there's a bunch of cool ones.
Yeah. So we've done a handful of projects across the country. There's a couple of there are like 9 states that we've invested in. Um, the different types of projects, I guess the different categories are multifamily value add. So that's kind of the most recognizable. I think there's a lot of people doing that, and that's where you buy an apartment complex and you add value to it and make it worth more, and then you're able to. It's a nicer place to live, so people are willing to pay more to live there, and that boosts the net operating income and the value of that asset, and then you're able to exit it and make some money on it basically. So um, so the value add property, the most recent one we did was in St. Louis, and it was a 144 unit townhome community. Um, really interesting one. It was built in the 60s. The developer who built it still owned it, and they were in their 90s, in their mid 90s, and I think the husband passed away. And so they're kind of unwinding their portfolio. Um, so that scenario was one where they didn't have any debt on it because they built it decades ago. They because they didn't have any debt, their expenses were low. They didn't need to push rents and keep up with the market. So the rents were low, they were below market. And it was in good shape, but it needed it had some deferred maintenance. So we were able to buy it, go in there, do a light reno on it, and make it nicer and gradually bring it up to market. So it's been a really good investment. Um, and we're looking at doing other ones like it coming up later this year. There'll probably be a 200 plus unit, 220, 230, something like that, in the market in St. Louis as well. I think it'll be in the county, um, that we'll do another value add project on. So that's kind of one flavor. The other flavor that we do is a conversion, and it's an asset class conversion where we buy hotels, we convert them into efficiency units, into long-term rentals, and they're really great. You The assets that you buy, they're typically um, located in really nice areas, like close to. There was one we did in Olympia, Washington, that was within a mile roughly of downtown. And so if you were to go and try to find a parcel that's that close to downtown, that big of a property, it would be hard to get into. So this one's located right near job centers, near public transit, um, all kinds of amenities. So when you take that space, you convert it into a multifamily. Um, the location's great, access to jobs, all that. It's also typically amenitized. So they've got this property has is 196 units. It's got a restaurant. It's got a huge convention center downstairs that'll be renovated and turned into some pickleball courts and some interesting things there. Um, and it'll have like a dog park outside. So when it's all said and done, and then the restaurant itself will be leased up, so that'll be another source of revenue, and it'll have like lockers and just be a really nice place for people to live.
Huh. That's that one's super interesting to me too, because I guess I didn't realize that. I guess just apparently by converting it to like long term rentals, you can get a higher, um, or it's better than just continue to operate it as a hotel. Because I do see a lot of syndications where people buy hotels, and it's super interesting to me. I never really thought about taking that, converting it into multifamily too. So very interesting.
Yeah, there's a couple of reasons why it's beneficial. One is just the hotels are expensive to operate because you have a bunch of staff that are there all the time, and you have way more frequent turnovers. You know, people staying for
Recording
two,
stopped.
3, 4 nights. Oh, okay, that'll be fun. So you have people just staying for a few nights. So you've got a bunch of turnovers during the month and a lot more overhead.
Mm,
Um, and they're just valued differently too. So depending on the market, uh, a hotel will be valued at 3 to 5 times revenue, roughly, and a multifamily property can be anywhere between like 7 and 11 or 12
sure.
times revenue.
Yep.
Um, so it's just you can get a big lift when you buy it, renovate it, and then stabilize it and lease it up.
Huh. That's super awesome. Any other flavors that you guys like to do?
Yeah, so there's one other one, and it's a land development, and that's a nice strategy with an operator that knows what they're doing. And so we have a great partner in Arizona that's been developing land, buying land for decades, and they're one of the biggest private landowners in Arizona. So they got a ton of experience. So that's another one. And the way I look at the different strategies is just that really the goal is to provide people with uh, lower correlated private investments that they can add to their portfolio. So there's different sort of upsides and downsides and risk profiles of these different kinds of strategies.
Mm-hmm.
But I think for someone looking to have a diverse set of real estate holdings, these three are nice, and we're looking to add more over time.
Awesome. Awesome. So that's super interesting. I love what you're doing there, and I like the different flavors, like you said too. Like maybe someone's looking for, maybe a little higher return here, or maybe a little more stability here. You got options. So that's awesome. Um,
Definitely.
so getting into some fun questions here too.
All right.
This
Hit me with it, man. I'm ready.
Yeah, this one I like to ask. I had a college professor ask me it once. He's like, "Stand up," and he asked me it right in front of like the whole classroom. I was like, just like, I had no idea. But,
Oh yeah.
one I like is, what is your biggest failure, and what did you learn from it?
Yeah, that's a good question. I think it's something I was touching on a little bit earlier. I think the biggest failure is just like being afraid to not being afraid per se, but like overthinking something and not taking action. And I think that there's just a lot of value in, if you're interested in something, learning about it, do something about it, right?
Mm,
Whatever that means. You know, because you build your knowledge and experience by just getting in there and getting your hands in the mud, getting busy, getting active. And uh, yeah, I think there's been a lot of times in my life where I've kind of like been like, oh, I'm not sure if I should do this. And uh, for example, in real estate, when I wanted to really grow my portfolio, I joined an accelerator program and started taking some classes, started learning more, listening to a ton of podcasts, learning more about underwriting, learning from others. So, um, yeah, you just build stuff incrementally over time. So, like, one of the things that I like to do with my investing group is, they're a great group of people, and we also do these physical challenges. So, like later this year, we're going to do a Spartan race, and the Spartan race is a super challenging thing. It's like some of us are doing a single race, some of us are doing all three races in one weekend. But any training you do towards that race, like for me, I've been building up like to do like push-ups and pull-ups or whatever. And you start out and like you can't do any pull-ups. And so you try to do some and you don't get your chin over the bar, but you just persist and you keep leaning in and you put your intention out there. Sometimes in a group too, it's really valuable and beneficial just to like figure out what your goal is, whether it's like, hey, I want to buy a single family, or hey, I want to do this race. And then like put yourself on the spot and tell people about it.
mm.
And I use that all the time. I mean, I have my own accountability, but as soon as I tell my bro from like college, I'm like, hey, my new goal is 100 pull-ups today. I almost went to bed the other night before doing that. And I was like, nope, I came down and knocked out the rest of my pull-ups and got my 100 in. Just because I said it, but I said it knowing that once I say this, that's it. I'm gonna do it.
Hmm.
So that accountability piece is great. And then just like leaning into discomfort and take action, be biased towards action.
That's funny. I know the literal exact same feeling. I used to work for a real estate company. We do 100 push-ups, 100 sit-ups every day, and then inevitably there's a day where you forget and you're lying in bed and you're like, oh, I didn't do the push-ups, and you got to roll out of bed and do a bunch of push-ups. So that's funny. I know the exact same feeling. But you were telling me too offline, you can do like a crazy amount of push-ups in a day. What was your record for in a day push-ups?
Yeah. So this year my record was 3,000 in a day. And
Jesus.
yeah, man, that was a good day. That was a tough day, I should say. And and then I think, what was it the other day? So I knocked out like 130 in one go.
Dang.
So that's hard. Like when I was doing that 3,000 that day, I was knocking them out like 50 at a time or something,
Yep.
or like 20, 30, 40, 50 at a time. Um, so what I like to do is like pick a number, like a high volume number, and something I could sustain over time. And then what you find is you hit that number consistently, and pretty soon you can knock out like 100 at once. And I always think like, wouldn't it be incredible if when I'm like 70, if I can just knock out 70 push-ups? You know what I mean? or when you're 100 and you just make your number the physical test that you have to meet for that age.
Man, I love that. That's awesome. That's super cool. Okay. But it all starts with just, like you said, taking that first step, because that's the terrifying step, because you don't know what you're doing and you're inevitably going to get punched in the face. But but that is the
Yeah.
super key, the super key step to take. So I definitely struggled with that as well, continue to. But I imagine a lot of the people who are, maybe interested in doing some passive investing, or what have you, they're probably struggling with something similar. um, do you have any like special, like, I don't know, hoorah motivation words for them or something particular, or is it really just like you got to get over yourself and you got to take the first step?
Yeah. I mean, I think that that's a big part of it is just getting in there. And there's no one, there's so many different ways you could plug into it. There are great books, like The Hands Off Investor is a great book, um, for people looking to learn more about passive investing. And that particular book, I think, is on Audible. So you can get that and just use, like what Tony Robbins says, net time. And if you're out there working out, whatever it is that you like to do, riding your bike, running,
Mm-hmm.
listen to that on a podcast, and that'll give you some exposure. Um, but there's also real estate investor groups, there's meetups and things like that.
Mm-hmm.
Um, you can use platforms like LinkedIn and search for people who have, you could search passive investor, you can search limited partner. So like the more exposure you get, the more you're going to start learning like limited partner, general partner, like the terms, like the vernacular and these things. And then you can just go and continue pursuing it. I'm happy to be a resource for anybody. And I'll drop my contact info in that we can use, that people can use to get in touch with me. Um, so yeah, just about kind of getting in there.
Yeah, totally, meeting people. Yeah, totally. Awesome. Well, another good question here. If you had to kind of rewind and kind of back up on your path here, is there something that you wish that you would have known sooner before starting down this path?
Yeah, that's a good question. I think so. When we were talking a little bit earlier, I was talking about you mentioned house hacking. I think just like getting started early is really beneficial because it gives you much more time to build your wealth. And there's another element of that, and that is like as you so like now I have a family, a amazing wife, amazing kids, and things like that. So depending on where you are in your journey and what your sort of risk comfort level is, right? Your story changes. Your ability to like use different strategies changes. Not that you can't, but like take the house hack scenario. When you're young, you can and sometimes be more creative and use a strategy like that because let's say even if you have a girlfriend, maybe your girlfriend's willing to put up with that, but once you're married, you're past college, etc., you want your own space. These kind of comforts and they become the security blanket that can kind of take away some of those options. So like when I was in the Marine Corps, man, I mean, um, we like in 2003, I went into Iraq, and when we were in Iraq, the whole time we were going from Kuwait up to Baghdad, we were like digging these skirmishers trenches every time we stopped. And basically, what they are is like a shallow grave.
Mm.
Like it's big enough for you to lay in, and it's about you know foot and a half deep or 2 feet deep or something. And it's so like if there's artillery that's fired at you and it hits away from where you're laying down, it'll explode up and out and it won't hit you. But what happened was I got used to sleeping in the dirt. Like that's what I needed. As a single dude, I needed like a sleeping bag and my bivy pad, whatever, I forgot what it's called. And so as a young person, um, it's just I guess it's just about getting in there, like again, going getting in the arena because when you're young, you don't there's a lot you don't know. And so sometimes it's hard to know, like, well, what do I even need to do to go buy my first property? But getting in there, getting active, you'll learn that. And then you can use a strategy like, when I got out of the military, um, you can use the VA loan to buy up to a fourplex. Um, so you can buy up to a fourplex and then live in one unit, rent 3 units out, whatever you want to do. So you can get in there and buy an asset early. And so it's not a regret. It's just like, but I got out in 2006. So 2008, 9 is when the shit hit the proverbial fan, right? Like
Yeah.
we had an economic like oh shit. And then but like buying right after that would have been a really opportune time. Turns out we did end up buying a couple years later, but right, like just getting in there and taking advantage of market cycles and different strategies that people have available when they're young,
Hmm.
and is something I could have done when I was younger.
Sure, sure. I was never in the military, so I never got the VA loan, but that is something like I hear people say, and I'm glad I did. I did the whole like whatever you kind of poor living conditions. I'll put it, sleeping in bathtubs and woodsheds and all that stuff. Just
Yeah,
way in over my head, live and flip, and all that fun stuff. So, um, I would echo what you said, and I would encourage others to definitely to go down that path. And is that like, if you were talking to somebody who had really limited real estate experience, is that kind of your main words to them? Is like, hey, just use the tools what you got, get gritty, get started because in the words of Alex Hormozy, forgive my French, but big shit takes time. So
yeah,
is that kind of the advice you'd have to him, or is there something additional?
yeah. I think the other part of that is just like seek out allies, right? Seek out allies. And I'm purposely not using the word partner because you don't want to partner with everybody, and you don't necessarily, not everyone is worthy of being a partner. But um, but you can learn from a ton of people, and you can seek out allies who are on a similar path. And it may be like, let's say you have like construction skills, and someone else has, I don't know, someone else has a rental. Actually, there's a group here in Colorado. I should look this name up, but it's a group in Colorado that's like three guys, and they form an organization. But the way that they sort of met each other was one guy had some construction skills, and he rented part of the house from these other two guys. And then he's like, hey, I got plenty of time on my hands. I could renovate this place for you guys. And they, I think the story was, gave him a cut of like ownership in the house,
Mm,
right? And whether or not it pans out like that, but just like use your skills and just
mm-hmm.
be resourceful. And then it turned out those three guys continued to invest together, started an organization, and um and it became big shit. You know what I mean?
That's
Like
awesome.
good shit though.
Yeah,
And so yeah, just seeking out allies, I think too, just like people will appreciate, they may not even be the same stage in their journey, but maybe they'll see themselves in you, right? Um, and just be willing to give you a chance. And then it's just about showing up, right? Like just show up. Someone gives you a chance, um, and you think you can't afford it right then, find a way, right?
mm-hmm.
I've heard a lot of people talk about that. I've heard Tony Robbins talk about that in his life, and I think it's true. Seize an opportunity when it's there.
That's powerful. I like that a lot. Don't make excuses, make it happen. So I like that.
Yeah,
Good, good. Awesome. Okay, well, just kind of getting into a couple closing questions here. Is there one myth about the real estate industry, the syndication space, that if you had the chance to debunk it, you would? Is there anything you could think of there?
yeah. I think we talked about this before, and I forgot what my answer. I forgot what I was thinking about. I think some people will look at new things and they'll immediately dismiss them. Right. One thing I've heard a lot of interesting things from people looking at syndications, and I've heard some people say, "Oh, that's a Ponzi scheme," right?
Mm,
And what I told my team at the time was like, guys, that's a good thing, right? Like people should come to you and say and have a healthy dose of skepticism.
Mm-hmm.
And then it's your job and our job to open up access for them and give them the information they need to decide if it's something that's a fit or not, right? It's okay if someone has some skepticism like that, but is it a Ponzi scheme? No, it's unfamiliar, right? It's unfamiliar, so get familiar. So I think it's one of the things, like people will dismiss things because they don't want to take the time, or maybe they don't have the time to go and find out more. Um, or they'll sort of misattribute, like if they've heard of one thing going bad somewhere, or they've read a news article that like, oh, this is all, this is fake, this is whatever, they'll attribute that to everybody. So um I don't know if that's like a myth to debunk per se, but it's just more about like it's kind of on people
Right.
to learn.
There's a lot of like false beliefs, kind of, for sure. Awesome. Awesome. All right.
Yeah.
Well, where else, you know, your wealth of knowledge and experience, and like every time we talk, I pick up stuff from you. So like I love doing this. But where can people get more of you and how do you say consume more of your content and get in touch with you?
Yeah, so I'm getting ready to publish a blog. It'll be under my full name, Nathan Penn Maxwell. So I'm gonna provide that link and make it available in the chat. And then from there, if folks want to reach out to me, I'll provide my email. For anyone who wants to reach out to me, it's Nathan at startcapitalinvestments.com. Um, you can check out our website, startcapitalinvestments.com. And there you can see our track record. You can read about the company, read about the strategies that we talked a little bit about on the call, um, and connect with us if you want to schedule a meeting. Happy to meet with people and just get to know them.
Heck yeah, heck yeah. Is there anything that you wish I would have asked that I didn't?
No, I don't think so. I think it's really great to have the opportunity just to connect with you, and I look forward to digging into any other topic or subject area in the future, and connecting with any viewers out there that want to learn more about passive real estate investing.
Heck yeah. Well, I will get all that information from you, so I'll have it on the description for anybody who's interested. You can click on it and go check out and connect. And other than that, it was super awesome connecting with you. Like I said, every time we connect, I pick up stuff. So super super grateful from my end, and I hope others get the same value that I get from it.
Likewise, I appreciate you, Alex. Thank you, brother.
Yep, you bet. All right.